All right, let's see if we can get it working today. Instability. Let's see how it goes today. Hmm. 20 dropped frames so far. Yeah, it's not looking good already. I'm gonna try this again. Blah, 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 blah. Yeesh. Alright, let's try this again. It happens. It happens. Okay. So, let's try this out today. Yeah, let's see. That's to be expected. Apple's just kind of doing this head fake nonsense. Can't find its feet just yet. Hey, good morning. I think that I'm not really sort of sold that Starbucks isn't going to go back up again, but it had some problems. This head fake right here was really nasty. It pushed above and then dropped back below the support. I mean, it really went back beneath the creek very quickly, and then it just has crapped out. So it looks bearish to me. I think it might go back down to 90. AMD got to 140. That's actually the number that I had, so I'm pretty happy about that. It may have gone above that creek, which is kind of incredible if it did. I don't particularly like the shape of it right now. It's going kind of parabolic here, highly overbought. Yeah, it did go slightly above that, so that's pretty impressive. I mean, there's technically like a 165 gap. There's another one up here around 177. I do not believe it actually got filled. So there's plenty of space to run for AMD. And this was one that we liked for a lot of reasons back before earnings in February. But like the rest of the market, really just kind of took a turn for the worse for a while. It's been a slower recovery than some. Not horrible, but a slower recovery than some. And anyways, but in terms of like a 5-wave, it was a really straightforward shot to 140, which is back where it was going into the kind of going into January, but it was really back in December. So at this point, I would say that it's broken out of pretty much everything it needs to break out of. Now, where it's at currently, if it distributed, then the previous shelf down here at 125 is still valid. I would suggest that if you did trade this, you just kind of keep in mind that 130, 135 area, probably more like 133, and then 125. Because it's getting a lot of news and headlines because it's been really pushing hard, and that's good. I mean, I traded it several times to the upside, made some decent money on it. I didn't trade the whole way, and in retrospect, there were a lot of stocks in the market that I had looked at going up into August. And I think that one of the things I'm going to take away from the last couple months is just remembering that like the longer play is usually the better play anyways. It may seem like it's not going to work out. It's easier. It feels better to get like quick little 20, 30, 40, even 100% trades. And those are great. You could play volatility and get them, great. But the overall picture here was very straightforward. And like once it made that bottom, it was like, oh, it's probably going to go back to 140. I don't think I could have said that any more than I did. That was my target for a long time. And how it got there, it was, debatable, but we were talking about a lot of different paths to get there. But I don't know. Good moral of the story would be just to, if you've got a big kind of a macro target and you think it's pretty strong, play that long play. And then just, if you want to, I suppose you could play in between. But anyways, Apple's been one I'm watching for a while. It's the same deal. I think it's a long play. And I think it's going to go back quite high. It's at an inflection point for sure. Weirdly, though, I don't think Apple, even if it drops here, I'm not a fan of this idea that it's going to tank. This is a bit odd. This is what we would call a... really, it's kind of done this twice. But again, I think it's iterating, so it doesn't really surprise me that it did it twice. And this picture right here, I thought this was an iteration of the larger. So you're really getting this kind of, I don't know, almost like a bouncing ball effect, right? Where it's like coming out and getting smaller and smaller. So far, it's been fairly on point with this sideways model. I had another one where if it broke out early here, that was like an early change of character. And really all that is just saying that like this was one of the iterations, and it is. It's not, nothing's changed about that. But if it had a change of character here, it sends you into a kind of like a new model. And that model sends you to potentially 300. I mean, it's very, very aggressive. But when you don't make that hit, then you're kind of left with, okay, now what, right? That moment of, all right, well, what are we going to do if we don't do that? And there's nothing bad about what's happening. It's just indifferent. This right here on a 4-hour time frame, this is a hidden divergence right there. And unfortunately, it's a hidden bearish divergence, at least at the moment. Now, the moving average hasn't really broken out that could be a bad sign. This obviously is under a lot of stress, Apple, because of the tariffs. And the biggest news there is that they are probably one of the higher, like, I guess, at risk, if you will, companies when it comes to China tariffs. And I think this is pretty obvious. You don't need me to tell you the news about that. But the problem is that those deals that have been struck haven't really been honored very well. And even still, even though there have been exemptions made for certain tech companies, the current administration has targeted Apple a few times, saying that they're going to specifically tax them, tariff them. And I think that's unconstitutional, but regardless, that may not stop them from doing it. So we'll see. Like, the U.S. president should not have the ability to tax a U.S. corporation just because he doesn't like that they're trading with another country. That doesn't make any sense. No U.S. president should have that power. And that's what he's kind of said at different times. So, oh no, he said something political. It's not that political, actually. It's just fundamental to American culture and economics and civics, for that matter. So, anyways, I think Apple is going to be highly volatile, and we already knew this. So when I look at the big picture here, I'm just thinking about how July 9th represents this kind of pivotal moment for Apple. It may have a pretty decisive move finally, which is nice. You know, even in a downside scenario, it's hard for me to imagine it not recovering. This isn't exactly like a brand new, IP or something. I mean, it's obviously like something that's been around for a long time. And I think there's a lot of good arguments against the fundamentals of Apple, but I've not heard anything that's made me think that it deserves to crash and burn. I just don't see that yet. I think it's a big scare tactic, frankly. There's been so much negative news, like nonstop. I think it's just a way to keep Apple from moving forward right now so that the longs can accumulate. That's my opinion. There are obviously downward targets. We don't need to get into all that right this second. I'm just kind of like going through the list here and working through them. So any ones that I want to hit. So the S&P 500 up at 608. Pretty straightforward call out on my part. I mean, the line's still there. I actually traded from Friday last week into Tuesday. I did not get out of anything on Monday, because Monday was kind of a sour day on the market. But I did trade up on Tuesday, and I didn't have any opportunity to really talk much about that. But basically, that was about 100% trade. I opted to get out at like 606. Could I have made some more money? Maybe. But my calls were for 605, and it was a weekend play, which is kind of dangerous. But I just had a really good, I don't know. I feel like it was a really good setup. So the reason I didn't trade out is kind of obvious, because Monday, again, was this sort of like whipsaw day. And there really wasn't anything to talk about anyways on Monday with that particular option. It was essentially flat, maybe a little red. There is still a bit of a bearish divergence going on presently, but I wouldn't be surprised if the market hit all-time highs or got close to it. I'd already said that I thought it'd probably come up to like 610. It's 608. Do I think it's going to break out and go to 650? I'm very doubtful of that. I've said before that I think we're going to come back down into July. I'd be a bit surprised if we were still high up. But that being said, it is what it is. I made that prediction a little while ago, so there's a possibility that things have changed. I'm not seeing a lot of change when it comes to tariff deadline and how that might affect the market. that's still coming up, and they've only made 2 deals. So out of like 100 and something. So, I mean, you've got a lot of issues. I read an article the other day that said like they were hoping to pass that bill, the big giant bill, whatever they're calling it, which has hit a lot of resistance. I'm not sure they're going to get it through, but they were hoping to pass it before, I guess, July 4th, and then they were going to announce deals. I don't know why they would wait. Maybe this idea that they're going to have this big July 4th to July 9th marathon of good news. That's the kind of the idea. But it's a little bit odd to me when really your market and your peoples, I mean the public, are kind of starved for news, good news when it comes to these tariff deals. They just really haven't had very much. The progress on the China deal is so-so. It happened, but it's not the best, and it really didn't resolve anything. It was just a framework. So at the end of the day, it's still a tit for tat, and you don't have like a permanent deal in place. And, hey, you'd say, well, I don't really care. The market's already run up. It's back to where it was. I'm happy with that. Yeah, but when you're looking at the future, when you're looking at what's coming down the pipe, it'd be nice to know that there's good news still there, right? If you're somebody that's bullish on the market. I saw another article yesterday saying that they think it's kind of complicated, but some of these other systems are analyzing how market flow works and talking about like 300 billion going in back into the equities or something. And I'm like, yeah, I'm pretty sure that's already happened. But also, I'm pretty sure that wouldn't happen until like they drag it back down. But that's me, So anyways, happy to say that the SPY call out did work out. It was good, and it did end up coming back up as we were talking about. And then the rest of it, again, I was really looking backwards at April and trying to determine like what maybe was missed, if anything. There's some pretty good TA out there, and not everybody that does these articles online and stuff is trying to like sell you on some massive run. I saw one that was pretty decent, and it was about a kind of a continuation pattern on what they were calling like a head and shoulder back here. I don't find this to be a very good head and shoulder on this particular one. I do think on IWM there was a pretty clear one, but I wouldn't have put it on SPY, but they did a pretty good analysis on it, and it had it going up past. I want to say it was pretty close to what I've got actually. It was like 630s to 640s, and that was just kind of like a continuation pattern here on the head and shoulder. Now I had previously looked at this and found that there could be a very, very large S-curve. This is a strange one to try to analyze and get it just right, but it had a lot to do with the intersection points that were appearing. Long-term patterns like this, it's hard to get them right, especially if you're not like 100% sure. So this could probably change, but this could be, again, a sideways period for quite a while going into the end of the year. If that's the case, I would not be surprised to see this need to kind of chop some more. Some folks will probably look at this and look at COVID and say, well, it's more like COVID, right? With these like sudden drops. So what happened after COVID is it just kind of kept going. And if you recall, the market had very similar kind of sign of weakness, and then big one, right? Huge drop. And then when the recovery happened, it didn't really ever pause to stop. But the problem with that is that later it did. And I think that you kind of have to take it for what it is, right? It's like the idea of this coming up, again, may seem great, but long term, this was not sustainable. Like there was a need for further trading, especially at these levels. So I would say two things. Like one, during this time period, there needed to be an SOS. Again, and in this particular case, it sort of had to be proven by quite a bit of volatility. So looking back at COVID, yeah, there's this extended push that continued up to all-time highs at the time, and it did. It pushed above. But then the retracement and the sideways period does last for a good while. I mean, it's not like immediately, oh, it takes off and it goes. This probably would be similar to us talking about going up and then really not moving until about August. I think that's probably a fair assessment. And we've kind of gone through this before. I don't want to go through it too much over and over again on the channel, but we've gone through this before, and one of the curiosities here that I have is, of course, the September breakout, right? So like this is where you have from September until about January. I think it's a cool and interesting thing to look at, although maybe some people find it a bit redundant because we've talked about it so much at this point. But the fact that, yeah, this was basically what GME was doing. It was already sort of following through, and it had broken out. And of course, it's down low, so it's not like up here, right? It's down here. But it had already kind of like broken out of its range. So if you had like let's just say we have a range down here. It had broken out, and then January it kind of takes off. And of course, we know the rest of the story is that while that's happening, and it's hard to know why exactly, other than like maybe the options chain or some other factors, why exactly that would have happened in January for GME. Like if you look at the chart, there's not really a lot of rhyme or reason to it. You can see like that's sort of another SOS, I guess. It doesn't even really go back through. It looks more just like more like an LPS, you know. So yeah, I mean, that's important for the market, but it's not, like, other than that, I can't really see anything hyper significant about it. Maybe I'm missing something. I haven't seen it yet. It looks like maybe it's halfway up. That could be part of it, you know. But again, whatever, right? It's kind of like, yeah, I mean, you could probably make up a million different reasons, but at the end of the day, it's like, I don't really know exactly why, other than the options chain and the way it was set up on GME specifically, and AMC by extension. But of course, we know that during this time period, AMC goes down into its spring. Now, both of them do have a huge run. But if you were just looking at comparisons, you would say that this is the more similar comparison. And then weirdly, I suppose, you get this kind of secondary motion. And we get a June move, and I went way too far for that. So for AMC, this is kind of what it would look like. So we get this drop. GME breaks out, goes way, way up. And then for AMC, it doesn't come up again until June. And it does reach its all-time high. And again, just by comparison, I'm going to do it proportionally. Just by comparison, that's kind of what it would look like. Obviously, this is way too high, but you get what I'm saying. And then, you guys are like, it's not proportional, Booksy. I know. But this is an interesting idea, because if we look at where we are now, and if you're somebody that's thinking like, well, I don't think that the market is going to be bad. I think it's just going to keep running up until the end of the year. And that the bigger, broader market is not going to be like AMC and GME necessarily. You could be right. So I think I want to kind of explore that idea. Oh, I know it's super stuck. It's been at $3 all week. Not been very fun to watch, has it? I mean, very, very, very taxing even to watch. I will say there's probably some news there that's good and some that's kind of bad. I got to give you a rundown because I did try it yesterday, and the whole time I was trying it, my computer, my internet was just crapping out. So I did record a video, but I had some issues getting it edited and put up. So I just thought, well, if it does it again, I vow to you this time, if it does it again, I will definitely do a video. And I'll keep it short form so that it just gives an overview, because I know it's frustrating for those that like the information here and they want to hear it. To have to come on here and have it break down is extremely obnoxious. So I get it. I'm with you. I'm not happy about it either, but I'm doing my best, you know, and I'm a fairly tech savvy person, I work in my technology like all the time. So it's odd for me because I'm trying to troubleshoot it, but I haven't really been able to figure out why exactly. Sometimes it's like perfect and sometimes it's not. It just doesn't really make sense to me. So I've done my best. It kind of boils down to either internet connection problems or YouTube. And then the only other issue that technically has happened is the battery thing on my computer. That's on me. I don't think there's much I can do about that right this moment, unless I can get a new computer, which is long overdue. The computer is like over 10 years old, so it's a good computer for what it's worth. Well ahead of its time when I got it. So I'm not, technology-wise, it's not like 10 years old, but date-wise it is. So anyways, this push out right here, this is kind of where I'm wondering if we do get a, again, like an August and then almost like another move. Now, I don't know how long this would take. This was quite a long period of time. So this goes from August all the way through January, right? And when you look at it, it's again, it's a little bit misleading because you might say that that's like only a few months, but it's not. It's actually a year, right? So that's, again, it's August 2020, and then January you have the big breakout, and it goes all the way to the next year. So it's a whole year of upside. That doesn't seem as likely to me right now on the current setup, but mostly because I think this is like a smaller version. We call it iteration, right? Where it's doing the same kind of pattern. It's clearly similar, but ultimately, like, you can see the structure of this is extremely small by comparison. Another argument that could be made is that potentially is that this isn't even like remotely in this area yet. It's actually, it is going to do this, but it's not going to, it's still missing like one of these big drops. So one way to look at that would be like that this is essentially like we're right here instead. Now, I don't like that we are here kind of stuff typically, but if it just helps you to visualize it, I think it's okay. But this idea that like, oh, we're definitely going to keep running up and then we may have a backup, but we'll stay above 600 or something. I don't know. You know, this has quite a lot of time of widening built into it. And it's really hard to know what the future holds. And right now I'm like, this is sort of like the early move that sort of predicted a bigger downfall later. And COVID, I don't think any normal person would have predicted it. So that's kind of came out of nowhere, but it's there. The weakness is there. So there's an option there to kind of drive low and check those levels again. I think you could make an argument, and there are plenty of people that are doing it, that it's kind of an opposition, which is this one, right? Where it's like, yeah, it could go up again, but I wonder if it's actually going to go up and then have like a massive downslide, and then it's going to resume a real bullish run up, you know, and that's kind of what I have here. So there's certainly multiple ways to look at this. And I think anything that you look at, just take it with a grain of salt, my TA included. So we're going into this period right now of kind of, we got to make a decision, right? And we're at the top. We're not quite at all-time highs. We're really close. We're stone's throw away from it. The market is a bit bearish here, but has room to run. So, I mean, there's positives on that side of it too. If it were going to SOS, it could be, again, right here in this little pocket. You could have an SOS that, I kind of have it on the red, this lower red. This would be like an SOS where it's kind of building out along the top. It'd probably look more like this. And then it would break out some later time, maybe again, maybe in August or something, and then go up. Another option here is that this really just needs like a deeper pullback now. In some ways, I think a deeper pullback now, going back down to 550s, would probably benefit us in the long term. I'd be willing to say that if it went back now to the 550s, it probably won't have a massive drop like this later. Because that would be a signal that bears are trying to take control earlier. And really, it's a shakeout of, like, let's get out of these positions, these bearish positions, and then bulls buying back in. And building a secondary support here would be very strong. I think you're much less likely to have some kind of massive fallout, as opposed to this foundation, which is not particularly strong in my opinion. There is some decent volume in it, but there's a huge amount of holes, like gaps. We've kind of gone through this before as well. I don't think that ETF's gaps are as significant as like an individual ticker, because an ETF obviously doesn't represent a specific ticker liquidity. It's a kind of a market grab all depending on what's in that bag. So there's a bit of a difference in my opinion when I think about liquidity. But that being said, it's still a traded security. Like, it's not a stock by itself, right? But it is something that's traded as if it's a security, like an individual one. That makes sense. So some people will trade the S&P 500 and they'll trade options on it. Well, okay, are you really trading as if it's a basket? Or are you just trading it like it's just a number, right? And I think that's where you get into these liquidity questions, perhaps. I will say that of all of the tickers that you look at, anything that's an ETF may have longer standing gaps that never get filled. So it's a bit of a question mark for me. But nevertheless, the idea of gaps being that they're leaving things behind, and then when you go over and you look at some of these other tickers and you're like, do they also have gaps? Yeah, like everything was running in lockstep. So I have this kind of feeling that that's a bit weak. And again, it would not surprise me to see us come back and retrace back down in some kind of a macro bottom here, like a bigger picture. Let's come back down and get to those lows. And S&P 500, I think, would benefit from it. I'm feeling this kind of this setup might end up being more bullish if we get that pullback now going into August and then maybe even into November, December of this year. I think it could be much more bullish long term. If we just continue to run up, I have to kind of like keep this on the back burner. So I'm not talking about AMC just yet, mostly because there's not much to talk about, at least right now, not in terms of price action this week. We can talk about the bigger implications of it for sure. I know yesterday there were some folks that were asking me questions about different things. I wasn't able to get to any of it. So I haven't really addressed GME and AMC yet. I'm just kind of running through the motions here. The ones that I typically follow, FANG took a really big hit, and that's okay. I mean, I knew it was probably not going to get much beyond here, to be honest. This is so close to what I had in mind that I'm really not convinced it's going to go back up. I think it just got there a little early, maybe because of certain news elements. I had, again, anticipated this would come up here and just take longer to get there, right? But it hit there earlier. So this looks like I'm saying, oh, I think it's going to go up again. But really, this was after a low. I had it coming down to like here or something. And then coming up. I did think it was going to get up here and then go again. But ultimately, it was, if you look at it, big picture, it's kind of like, it did all that early, I'm not bearish on it, but it certainly had a breakdown. And you can see on the RSI, it needs to sort of find that support again. This is a daily chart, I think. So this is a pretty long-term chart. This is a build out. And I did make really good money on it. I told you guys I made like a ridiculous trade because of Fidelity getting a really good fill on one of my orders, but on this pump right here. Otherwise, I just have longs. Like, I'm just in shares. They pay a dividend. I'm very bullish on FANG. It's a very good company overall. There's really nothing wrong with their business model. The problem, of course, just is always going to be Middle Eastern fears and stuff like that. I'm kind of surprised here that they actually dropped, because if the Middle East runs low on oil, that's just going to raise prices, and that's good for Fang. So I'm not really sure why like that's really good for Fang, because they're an American. They do the Permian Basin and like one other place. I'm not really sure why that would hurt them. I'm really kind of confused by that. I guess just it was an excuse to sell it. It was already in like a distributive action. So to me, I look at this and I'm like, it doesn't look good. But then again, it didn't come back and check this guy when it broke out, and now it has. So I'm like, I kind of feel like it was just an excuse to sell it down, like war in the Middle East. Because if the price per barrel goes up, that's good for them. Like, they need to make a certain amount of money on per barrel. This is not profitable. This is more expensive here. So it's just very odd to me. I thought it would actually be good news for Fang. Even though I'm not saying war is good news, it's not. But I'm just saying, like, that's a weird way for the market to digest that news. It was very strange to me. I was like, who cares? That could not be bad for them, but who knows? Market's weird, right? It also went up the day that like the S&P 500 went up. You know what I mean? On that Sunday to Monday. So it's just very strange. It just like it was like a nothing burger, right? So let's land on AMC now and let's kind of go through this. So quiet day on a Thursday. Usually Thursdays are kind of one of my lowest streaming days anyways. We usually don't get a lot of people, but probably even more so because my stream crapped out yesterday. And I was just kind of waiting to see if people were going to come in. It looks like it's going to be a small crowd. So you guys are the ones that are going to get the TA, I guess. So here's my thought on, excuse me, on AMC in a nutshell, without going into the macro view again, because I think you guys are like core audience here. You've seen it enough. So my view on it is probably the same as your view. Number one, very low volume all week. Very important because it could be on a bottom. So it's actually not a bad thing to have low volume. But also kind of crappy because we definitely have a wedge, and that wedge has extremely low volume breakout. I'm not particularly thrilled about that. So we have to learn, like we have to think, like what does the low volume here mean? Like that's a question you have to ask. Is it good? Is it bad? I find it to be a double-edged sword. Again, low volume going into like a bottoming area after a sell-off isn't always a bad thing, but it doesn't usually mean that like a true bottom is in, if that makes sense. And then you also have to think like what happened on that bottom. This is a very dynamic question. It's not as simple as, well, it made a retracement and the volume shrank and then it's going to break the other way. You could say that if you don't know anything else about what's going on, and you'd be okay to say that, yeah, this might go back up. But the problem is that it broke down. So I have on the chart an ice level here from the breakout that started really in April. And I'm not using the bottom previous. This is the kind of high volume reactive bottom that this is kind of like what I'm trying to get at. I guess what I'm saying here is like this doesn't have that kind of high volume reactive bottom. It reads more like the second bottom perhaps, right? So like when you get this really high volume bottom, it's telling you there might be a stopping point. And then what you watch for is you watch to see, does it come back above? And in this case, it's clearly coming back above, but does it come back above the previous tops? And does it look like it's going to try to make an advancement? Is it pushing the creek at all? And if it does, and it's positively doing that, then you have this sense of it may be turning around. And this is the easiest way to read a good chart, right? A good trade in the chart. This is kind of exactly what we did. and why we got this trade from here up, right? There was scares for sure. We were worried that it would break down, but it never did. And that's okay, because this area right here then becomes the test. So after the first big reaction, you have the high volume. You come up, you make an advancement. So first it's like a high volume drop, high volume reaction. Then you make an advancement. Volume shrinks naturally. It doesn't peak. So we really had no worries here. Like, this was all really clean. It's really good. But all of that's like really positive. And I think that on the whole, this makes it super easy. I'm going to talk about this in contrast to what happened here. And why it's not quite the same, why it's concerning. So here you have a high volume drop and then a reaction. And then volume as it goes up. Volume's strong, but it decreases, right? That's actually a good thing. It decreases into the top. No one's going to be able to read that because it's like sideways. But that's okay. So starts strong, but then decreases into the top. That's actually a good thing. And then you have an advancement that doesn't have super high volume tops. That's good. Advances with really high volume tops that then drop back down are distributive. So this is all like really positive. Okay, so this is a good way to understand like why this ends up being such a nice buy-in. And then it's really, at this point, you could go back to like the model we were using and say like, was there a change of character? And there was. There was a change of character, no lower low, right? We know that. Volume actually remained quite low. And that's a good thing. So in this case, the reason I'm bringing this up, and I'm talking about this from the past, is that there's going to be a stark contrast here, because in this case you have this really obvious bottom. You've got a lessening of volume as you increase. There's no massive high volume top, but it does advance, trying to push the creek. You get this idea that, hey, we may be going, but it has this kind of a backup period, right? The backup period is also marked by, average to low volume. It's not particularly high. There's decent sell-offs in there for sure, but they don't ultimately advance, right? Sellers don't get to advance. And then that's where you see like, oh, there's another bottom here, but the volume's not nearly as high as the first. Really easy. So it's a higher low. So you see how this kind of builds into itself, and volume is really the only indicator that you need. We knew that there were other things here, of course, and we were tracking those things. But this is what I mean when I say like, oh, it advanced, right? It did. See how it pushes over the top there, and it pushed high too. So then here's kind of where things get a little bit maybe dicey, right? When you zoom out and you look at the big picture, we've already talked about this as probably a distribution anyways. This won't surprise anybody who's been on this channel before. But this is not the same. So now you have this kind of ramp of volume into an extremely high volume top. So notice how that's different. That's different from what we experienced here. We could make perhaps one further argument, because we could say, well, this technically ramped in volume, Booksy, right here, right, on this first push. If you look closely, you'll see that the volume actually went way up really high. That is a high volume push, that first push that happened back here. You could make the argument that, well, this is just a retracement. If you look at this on a macro level, you could say that this is actually just a retracement like it was here, and we still have to make this one. Well, surprise, surprise, it's already on the chart. Why are you being so cheeky, Booksy? Well, I mean, it just is. It's already there. Like, that's the interesting thing about it, right? It's like, this is already a possibility. Because you could do this, right? You could come back up and have another top. Yeah, you totally could. It's totally there. It's already on the chart. So like we could make the argument that maybe this is not distributive because it has a high volume top, but rather it's just got a high volume top. It's backing up. Once it finds the support like it did back here, it's going to run up again. And then maybe it does this again. Who knows? Widens out again. I'm doubtful. I think it's going to go down. But you have the volume drop here, which again is fine. A similar thing happened back here, and I think again you could look back and say that that comparison is fairly valid. I mean, I'm zooming in on it a little bit more, so hopefully you can see it a little better. I know my charts are not always the most clear, but we zoom in on this, it widens the bars out, helps you to see it. So you can see like the argument perhaps could be that this is sort of a micro iteration. You can see right here there's a breakout, a backup period, and then there's a couple advancements, and then it ramps up really high, right? And then it comes back down. You might say that that's the same as this advancement here with the backup period. Then it ramps up really high and then comes back down. M cross, you wouldn't be wrong, by the way, if you wanted to analyze it like this. Because you're right, there is a M cross down here that breaks out, right, down low. And then there's another one up top where it comes back and like reaches back down, right? So there's like multiple ones. So would it be wrong to say that and suggest that this is actually just like the same kind of breakout, right? And we're just doing it on a much bigger scale, right? Well, I think you'd be right to say that. You'd be basically suggesting that this is there's not really a great way to put this other than just doing this, that this is the same thing, right? So it's going to get a little ugly for a second, but that you could say, yeah, that's pretty much the same thing, right? And we know that. We know when we were advancing, we were saying that like that's good. It made another high and it backed up. We were watching to see how far down it came. You know, it ended up having a really shallow backup here, and then it just ran. All of that looks pretty good. And then this guy is kind of now what you'd be looking at eyes on, suggesting that, yeah, maybe it's the same. And you can see during this backup period, let me get rid of this other stuff now. That's just for the illustration purpose of kind of saying it could be the same. During this backup period, you have a slow drop by comparison to the whole, right? Think about how long this takes versus the run up. The run up was what, 1 or 2 bars here on the hourly, and then there's like, I don't know, 10 hours of backup. So by comparison, is this much slower? Of course, than the run up. Yeah, it melts up for 1 hour, and then it takes 10 hours to come back down or whatever, or more. Then the volume here is similar. You have a massive kind of drop in volume. And I think at this point, again, if this had been expanded out, this time period right here, if this had taken days instead of hours, you would have been sitting sideways for 1, 2, 3, 4, 5 days, which is kind of like what we are doing now. And so by comparison, this could be a similar situation because you do have this really long period of like no volume or very low volume. There's one spike in here with the first cross, and then that's it. The rest of it's very low compared to the rest of it around it. Look at the region around it. Look how low that is. All right. And this is a deep backup. I think this is at least a 618 retrace. Yeah, this is 618 right there, retracement. So it's a pretty deep backup on that first move. Okay. So I would say that, yeah, that could be a valid argument. And like I said, I've already got it on the chart. It's interesting about these kind of ideas of iteration or fractals or expansion or shrinking. Like, it doesn't really matter. Sometimes it's like redundant. And in this case, kind of redundant. It worked both ways, whether you were looking at it as a reduction or a expansion. Both of them give you an option to come back up here and potentially make new highs. This does push above that top, not by too much, but it does. And this is sort of what we talked about, maybe coming up to like 420s, maybe pushing above that top. Very similar looking. And again, I didn't design it this way because of this. And you guys know that. I actually did it for other reasons. And so it's always cool to kind of see it, what kind of works both ways. It could be that case. This could be coming back up to 420 if the market had a rally moment going into the 8th or 9th, or even just a little before then, depending on how this sets up. So big picture wise, is this necessarily like a bad thing then? Well, this is where we kind of get into maybe some more, I guess, fundamental debates about this setup, because you have a high volume top that certainly looks very distributive, and it is. And there's no, I mean, you guys are going to say, well, it's distributive, but what if this, what if that? Look, it doesn't really matter big picture right this second, whether you think this ultimately leads to a bottom or not. On the small term, this kind of a high volume pump that then drops back through a creek is distributive. So as soon as this came back down through the steepest motion here, it was all but guaranteed, right? I mean, you can't guarantee anything perfectly in the market, but it was basically all but guaranteed. It was going to come to the next ice, the next support, and it did, right? And then once that breaks down, all but guaranteed it's going to come back to the next ice support, and it did. And then when that breaks down, you're like, crap, right? Are we just going to keep doing this over and over again? And the answer is maybe, because each one of these times you see the weakness, right? There's signs of weakness in there that kind of lead you into the next motion. So like naturally, if you keep going down this path, you're going to end up pretty low. Like it's going to come really far down if it continues to kind of keep dropping these supports on the way up. These are parabolic like supports. Here, I'll get rid of that so you can see them, right? As it was rising, it was creating trend after trend after trend, each one having at least 2 hits. You make the third hit on the way back, and if it breaks after the third hit, it's going to go down, right? And so this is certainly an SOW. Nobody, in my mind, I don't think you can look at this and say it's not. But you could say, well, if it is an SOW, does that mean it has to go down now? Again, we're looking back here thinking, I don't think so. There was a similar kind of patterning here in some ways, and I'm not trying to draw this comparison too literally, like too exactly, but yeah, certainly this is also a breakdown, and this ultimately does come back up, but it never kind of comes back into that first trend that was built. Now, this doesn't quite have the same parabolic look as the big picture, but my point is that, like, yeah, it broke down, but that doesn't mean it can't come back up. And a sign of weakness is like that too. So what's the problem with this having low volume, if that's the case? The problem isn't the bottom having low volume. The problem is the reaction having low volume. So if we were drawing the comparison between the two, we said it before, there's a low volume motion here, but there's this really high spike in volume right in the middle of it. And what that is it's like the first creek jump. And it has to have some kind of an obvious accumulative bottoming advancement / reaccumulation motion. I'm very concerned by the motion that led to this, because this is an extremely weird upthrust here that doesn't really fit. At first I thought, well, if it's an auto reaction, you should have a strong volume bottom here, and there's a decent influx. When you look around it, the volume itself is okay. Like, it looks pretty high compared to what's next to it, but what's next to it is very, very low. What's bizarre to me is that then there's this like push up. It does not advance on the first go. It does not. And then when it advances on the second go, both times it goes back above this ice level and fails to advance. But the second time is actually a very high volume rejection, which is kind of odd. So either A, we didn't want to go too early, or B, it's going to distribute, right? And that's kind of all there is to it. So I'm like looking at this like, why in the world have that advancement there at all? Like, why even have it? I didn't really have a strong answer. you needed to have an advancement, but the way in which it happened was very odd. It would have been far stronger if this had advanced and the volume had remained low throughout. And it did, again, objectively it's low, but like, again, comparing it to itself in this little range, it's awkward. So there's no volume. There's almost no volume on this breakout at all. If you look at where the actual breakout took place right here, it's just like nothing. I find that to be extremely bizarre. And so what I was saying yesterday before we got cut off was that it's almost like the operator isn't involved. Like they are involved probably in that they're causing it to like ping pong around. But these are more than likely, if you're watching like a level 2, they're going to look like 100 share trades and nothing greater, right? Like 0 to 100 kind of level trades, which is odd. Now I'm saying that on an hourly basis. Obviously there's more volume than that. That would only be like a few hundred for the day. But what I mean is that like each of those bid and asks are going to be pinging around. They're probably really low. I've seen it before. And again, I don't think there's any problem with this having low volume coming down. That's actually a positive. And if you have that dropping volume while you're descending, like that's showing that there's an exhaustion. The problem is the buy-in is just so weak. It's very odd. We're missing that moment of really strong push and really need it. And I don't know what this is exactly, why it looks like it looks. To me, it's just distributive looking, which is awkward. And I wondered if maybe that's because this is like an auto reaction and a phase B top. At first, I thought, well, maybe that's the case, and they're just trying to push in advance. And like I was saying back here, like they did advance, and then they're going to try to come back down. But the question is like, where is the bottom, right? And it's just not here yet. So we don't have that big jump. We don't have that big volume increase. And I'm not seeing it in that particular motion. So what we've basically got is a range bound region now, and we're stuck beneath the ice. We haven't yet advanced into the next range, which is okay. I think that's a good thing that this didn't go too high. If this had come up to like 313 and dropped, it'd be a bit of a different question. I think it'd be more likely to be bearish. So right now I'm like, okay, I like that it's a little bit less volatile. That's typically a good sign because accumulation usually ends in a whimper, not a big bang until the very, very last second, right? So it looks really weak and then all of a sudden it's not. Whereas distribution tends to be extremely volatile. So there's like, I would say that if we're looking at this like, well, you've got about pros and cons here, Booksy. So, and you've talked about volume a lot. Where are you seeing this in the big picture? Like I said, I think it would be okay if I were going to draw one comparison. I think it would be okay to suggest that this whole setup could be very similar to this in regards to build out if you consider this first push up and this first push up as a possibility. That like, yeah, that's possibly what's happening here. Albeit this went higher, and this did not come higher than these tops. This did. But I do think that you have a possibility that it's just a normal retracement and it's exhausting itself, but we haven't yet made that advancement yet. And so there's no confirmation just yet. And as a result, because you're beneath here, there's really nothing, like it's still a contrarian play. So it's still a play in which you have to say, I'm trading against the direction of the chart right now. So this broke out, but there's no breakout. It sounds really weird because it didn't leave the range that it built down bottom. So where is the confirmation then? I kind of already have it on here. I don't think it's that complex. It's probably going to be right above at 310 to 315. But what I'm really concerned about at the moment is the volume. And I think that you need to have, when that breakout happens, you need to see that kind of like, let's call it a smart money buy-in, the big money buy-in. It needs to change character a bit. It's okay if right afterwards it kind of, chills out again as it backs up. But we have to see that advancement. I have on the chart, I'm going to get rid of this for now. I have on the chart a a series of parallels. So another thing I was working on was just kind of like, all right, normally if you get these kind of backups, there's usually two sets of parallels. One is downward focused, one is upward focused. These are pretty conservatively downward. You could definitely draw them a little more extreme. But this is the way I did it based on the bottom. I think this was the first line that I drew right here, right above where that 307 is, right there. And I said, okay, does that work? I went backwards and looked at it. I was like, yeah, that works. It's actually a pretty efficient directional line, and you can see it's being used quite a bit. It's not perfect, and I don't think it needs to be perfect. It's more about just generalized direction, because if and when this breaks, only one of the two is going to be used. You're going to have the upward parallels or the downward. So where's the upward parallels? Well, I hadn't gotten there yet, and I was going to do it yesterday on stream, and I didn't do it. But I would suggest to you that right now, if this is where it breaks, it's already here. It's this guy, right? That's going to be the upward parallel that's used. So if you go ahead and copy and paste that downward ice, I would look backwards to these supports because this is where it would have been set up. This might seem sort of like tempting to like gravitate to these guys, but if you did it right, and if you're right about it, it should go back to there. Yep, and it does. See that right here? So those are your upward parallels. You've got on the downward motion in, see that one right there? That's the support, the drop through it, support, drop through it, distribution, and then rejection, the hook. And then look at where it sets up when it comes up top. It's that easy. So if you know that if that turnaround happens right here on this ice, that ice is probably your upward parallel most of the time. And we could go through and kind of look at this and sort of find like a perfect middle, or we can just use supports and resistances. I think this is a really good one because I'm seeing like a support here and then a resistance here and then a resistance here. And then again, when it came back up, even though again there's some weakness in it and then it pushes through it, it does ultimately leave from this area right here. So not perfect, but it's pretty close. And then we would look at the top and we'd say, did it obviously make those same markers on the way up? This is just another way to kind of check it out and sort of see if that's correct. Yeah, right here. I mean, you can see it. I don't know. I don't really need to highlight them all, but I'm going to do it anyways. Right here, and then when it came back down, you have a triple motion. And again, that triple motion is super awkward. 1, 2, 3, but it's there. And what's interesting is it almost makes more sense now that there's that parallel, because it's like pushing beneath that. It doesn't make a lot of sense sideways, right? But it does make sense as a parallel. So this actually is interesting because this level right here at 345, I think we had pointed this out before. It was really more like 360s that we were looking at, and then right below it, there's kind of like a middle point between the two. I think that's kind of fascinating because I wonder if there's actually, that's like kind of like a center mark for, it might be. Yeah, it is right there. See that? So this is like the bottom, this is the top, bottom, and then that's like the middle, and that's where it broke through. That's an interesting point. That could be useful later as a triangulation point. So is this effective as a parallel structure? Yeah. What about the top? You know, these aren't exactly even, and you just kind of based it on these points down bottom. I did. And then that guy. Well, what about the top? And again, maybe what we could do is use this one as well. This looks like this was the actual middle. This guy. Yeah. So we're getting a nice kind of like area right bracketed in the center. That looks like where the gap is too. So this is going to be an important area to get above, you know. What about this area up here? Is that even used? Is that part of it? You know, you can keep going like indefinitely. At some point, you're probably going to want to stop. I would suggest that this is probably the last place I would go. I'm looking at this bigger structure that took place from March to March. Like really was all in March. So I would probably stop here. Yeah, I know it goes up higher than that, but I think that's probably as high as I would go. And then frankly, if you really wanted to keep going, although I probably wouldn't. I'm guessing that this parallel actually runs all the way back, and it kind of does. It's not perfect though, so it's a little bit willy wonky back here. I think you could argue it's not quite right. So instead of doing that, I'm going to use this one, since this was actually like a bottom. All of these might be potential targets going up, and I think they're valid. I mean, you can see the topmost one looks like our 460 target, maybe 450 right on the dot there. That sort of matches what we see on this final trajectory that we picked out. And I don't think there's anything wrong with that. I think you could use that as a potential, again, trajectory. You know, using that kind of drop zone point that also intersected this bottom, which I just screwed up. I'm going to start suggesting that this is probably the most important of the crosses. Yeah, right here. Isn't that funny how it's the same area? You guys are like, I don't know, man. I don't think that's very funny, but I don't know. It's just weird, isn't it? It's odd how when it works, it just works. So this ends up being a very significant marker, I think. Maybe so significant that I might even consider this kind of like a middle point, you know, between these top and bottom. It may end up being that that is the middle point, and that could be really helpful in understanding later. So it does come back down to that April 2nd, which is very odd, right? It's like that was part of it. So this area from like really from the top here in March on the 25th, and again maybe a little higher than that because this has multiple hits and obviously it doesn't hit the top there. Like if we took it back to that top instead, I don't really feel like it's as strong, but there's a gap. We could use it. And we'll just see if that works. See that gap right here and then this reaction back up. That could be what's in play. It's a really tiny gap. It's really hard to see on this chart. It's like right there. And that could be part of it. So we'll leave that there. And it does seem to be what was hit. So I don't know. Let's see if that builds out into a concise 50-50 across, like some kind of a channel out. What we're trying to identify, it might seem like we're kind of doing like a bunch of nothing here, but really what we're trying to identify is, yeah, I mean, that's pretty darn close, guys. That's where the bottom is right there at 291. Very close. What we're trying to identify is if you're developing a new outward channel, right? Where is it? And then that will help you determine maybe how you can draw a series of parallels or whatever you need to draw to kind of figure out where some potential targets are and what's more likely. I don't use fib channels a lot, but you could use a fib channel here as well. And a fib channel would be like, this is a top, a bottom, and then you'd have Fibonacci's. Like this could be like a 786 part. This could be a 0.5, 236, or whatever, right? You could do that. I'm not a huge fan of them. They do work sometimes, and I've used them before, but I don't know. A parallel is a parallel to me, so I feel like if you can identify the important markers, then what's the big deal, you know? So it's possible that that is indeed correct. This may need to hit 291 then. Could it hit 291 and do so without full-on capitulation downside? Yeah, I think so, because right now, again, because it made this reaction up and it did push higher than the preliminary support reaction right here, because that went above that top, this could be forming a range I was mentioning a minute ago. But this initial action does look kind of distributive. So what that would mean is that you're probably going to go into, you might have like one more push up here or something, but you're probably going to go into a bottom. And if that bottom were to happen going into, let's say, Monday, then I think that it's possible, yeah, you could hit 291. Why not? You know, when we came down, I think it was 293 or 4. It was 294 maybe. Low of 294. Yeah. So you could have a spring right here. That's totally possible. Doesn't that just look like a breakdown? If that's distributive. Again, maybe. But you have to keep in mind, like, the bigger picture here, the pros and cons are really just about the fact that this hasn't yet made an advancement. And there wasn't that volume on the breakout on the wedge, which just tells me, like, they're kind of, for lack of a better word, they're just kind of spinning the plates right now. And you're not getting that breakout. But at the end of the day, like, do I think that this could potentially have that moment? Oh, yeah, like, it definitely could. But I think what you're going to be looking for is a really strong, obvious spring motion here with that volume push. So I think if you get that 290, I think if you get that 291 or 292, which is right in the middle, it may even hit 290. It's getting very close to a double bottom, like the 289 back here, which is very odd because it's like a full throwback. Then I do think you could see that secondary motion all the way up. It's a lot of weakness involved in that. I don't want to get too deep into like what that means on the big picture right this second, but yeah, that's a certainly a possibility. Now, does it just melt up? Well, we still have to look and consider like what's going on, right? If this is a head and shoulder of sorts, then we would be in this kind of issue or this, I guess, problematic zone of, you know, what happens when it gets to 320s? Yeah, I mean, could it stop? Sure. But I would suggest to you that the head and shoulder is rising slightly anyways. If it hits 291, you know, how does this build out as a head and shoulder structure? I mean, it's not going to be very complex. It's going to be pretty straightforward. You could have a potential stop here at 324. None of these should look at all confusing. Like, there's already markers there at 324. You can see them. And so this has already in some ways been, I don't want to say designed, but it has in a lot of ways been designed previously, you know. And so we have really clear evident markers where you could have a shoulder that breaks down. This is really similar to what I had drawn right here, which was sort of this chopping zone potentially going into the 9th. And I don't think this is particularly bullish, but certainly that's a possibility. And then that kind of negates the other ideas that we were talking about, at least initially, because then you'd have to have another buy up or else you're not going to go anywhere, right? But I would say that it isn't exactly wrong to suggest that that is possible. And it would certainly be a very valid outcome with a head and shoulder. The rest of these are also, I think, equally valid. I think you have a potential stopping point up here around that 345, possibly even going up to like the 350 to 360 area. It really depends largely on certain things. I think the higher it goes here, you know, you could have to watch the volume, of course, but you could be in that similar situation of like up thrust mode. And then big picture, when we were talking about this breakdown, that's now the 50% cross, but debatably, if you go to that 90 point over here instead, right, now you have a lower reaction right there. And this becomes the middle of this wave down, so it's a cross. And then coming back up, even if you made a full reaction, like almost straight back up, you're only going to hit like 426. That falls right into the pocket of what we had expected. So this is certainly something that's possible. So when I said, well, why make that move right now? We were talking about that earlier. Like, this answers that question. It does. You have to have there has to be some reason why the timing would be delayed. And I think that would be the primary reason, is that you're kind of spanning out the sideways. And when you do that, in this particular case, it is pulling the arc down, right? It's pulling that wave down further. So it's adjusting that midline of the S curve until it's where it needs to be. So the slingshot's there, but the trajectory has to be pointing the right way. It has to be pointing the right way. So And it looks like the stream is once again getting kind of crapped on, so we'll see what happens. If we lose it, we lose it. So I don't know what changed. Nothing changed, actually, so I'm not really sure. It's just going to 0 all of a sudden. You're not watching anything, right? I don't think so. It's just all of a sudden just stops working. I'm like not running anything else. Well, I'm gonna keep going. If it comes back, it comes back, and if not, oh well. This has been an ongoing struggle this week, so we'll see what happens. Really, nothing has happened, but all of a sudden it's just stopped being healthy, so not sure. You're probably going to hear some judders and some... It's almost like my computer's getting like suddenly bombarded with something, and I don't know why. It's just like everything's 100% going fine, and then all of a sudden it just starts plunging and it just doesn't recover, and I don't know why. Maybe there's some kind of a memory issue, but man, it's really frustrating. Oh well, I'll have to figure it out. What's weird is like this happens in like spurts, and then this happened before on the stream, and then we would have like a week that was just horrible, and then it'd be fine for another month, and you're like, I don't get it. Like nothing changed. So yeah, so anywho, so we've got some targets that are possible here, but you know, I wouldn't go too far on this. I just suggest that these are your likely spots if it's going to go up in this particular time frame. And there's not a whole lot. I wish I could tell you like for sure, like this is the one that's going to hit. I think that the 430 to me, if it's going to do a secondary distribution, the 430 and the 380 are the strongest. Like nothing has changed, so I don't understand. I mean, it could be the computer like running out of. But I have plenty of RAM. I'm not running anything else, so there's nothing else running.
There's something blocking the internet.
I don't think so.
Check on the power line.
I mean, if it's the internet, that's one thing, but I wonder if I just need to get a different streaming service, like instead of using OBS. Let's see if I can update it or something. I'll try to work on that today, see if I can find a more permanent solutions. Yeah, I have a Mac, like a MacBook, and it's like I said, it's weird because it's like fine. I don't know. We have no problems for like a month at a time, and then all of a sudden, then all of a sudden, like out of nowhere, and I've just not yet identified what the problem is. The only thing I could do is restart the OBS software. I'm wondering if that's part of the issue, is that their OBS is crapping out for some reason, or it needs an update. I don't know if it doesn't automatically update. Maybe it doesn't. The thing is, I run like pretty darn advanced software. I mean, I run like modern day 2025 Photoshop on my computer, and it's fine. You know, and that's a very intensive program. So I usually attribute that stuff to like processing power plus RAM plus hard drive space, but like all of those things are fine right now, so I'm not really sure. Like nothing has changed. Maybe again it's a battery thing. My battery has been crapping out for a while, so that's the big problem really. It's the battery. I don't know. You guys didn't come on here to hear me ramble about tech stuff, but it's been affecting the stream, so I'm trying to figure it out. It's not been a good week for it. I've had like 3 days of problems, so, and then I've been getting drops a lot more often. Just straight up dropping off the cliff. So I stayed with it this time. It's still a little spotty, but it's come back to a pretty steady rate. So I'm going to try to keep going. This, to me, again, if I had to pick one, if you made me pick one, if nothing else, I honestly think it could be that 380. It would not surprise me to see it hit like 380 and drop here. Technically, yeah, Tex. I actually think 380 would make a lot of sense. Based on like an expansion here, I think could suggest that we do get a bounce out, that then comes back down. But on the big picture, to me, like 380 makes a lot of sense because if I remember correctly, there's a big creek right in that region. So, but it's a little complex because like this guy has already jumped, so it looks like it's like going to go to the moon, right? If it holds. And again, this is a tough one because there's certainly a possibility that we're just going to keep going based on other factors. Like when you look at 2020, it's a triple motion to the upside. This is also a triple motion to the upside, although it's kind of disguised as one big one. There's actually 3 distinct movements here. 1, 2, 3. It's just odd because that's normally the way we would go up in the first cat ear. And in this case, I think it's pretty safe to say it's done, the 3, but I do wonder, if there was another one, would it be the third or would it be the next cat ear? And that's just not a question I can answer right away. But I do wonder, if this is going to do that. I think part of me just kind of views this as the ear, like we've already made the push, we're distributing, this is a weakness. The next one should come up probably again to this area between 380, 420, and then drop back down. And this time it would go back through the ice, which currently would sit around 330 when it came back down. And then drop back down to 290 again on a triangulation of sorts. And it's a little complex from there on, but I think you'd have essentially like a moment of truth kind of breakdown around the 290 area. And that's all of this stuff is included in that. It's just timing wise, I'm not sure. So yeah, to me, that makes a lot of sense. If I were picking one, again, I probably would pick either 380 or 420. The low end to me is not, I wouldn't say it's not valid, but it just doesn't feel like enough. We've been looking at that on balance, and the on balance has not moved down. It's just not. It really looks very elevated. If it were just the on balance volume in this, and I didn't think it was going to spring, I would honestly think this could be like an LPS type scenario. It needs to have some kind of a final push and drop if it's going to spring. So that's a debatable thing, sure, but if you don't think it's going to spring, you probably have a pretty decent argument right now because the on balance is not moving. It's not budging. It doesn't seem to want to go down. So it's interesting, to say the least. So anywho, when I look at this, I don't think that there's anything particularly good or bad. We're sort of just kind of working through the bottom. Well, I say they're not particularly good. There are some particularly good things about coming in a low volume here. But I don't like that there's no buy-in, and I don't like that there's no obvious final sell-off, even in this little range. Hasn't really made it yet. Sitting at $3 doesn't mean a whole lot to me. So my expectations would be the potential that we're going to be down here beneath 3 Friday. I know it's kind of backwards. We may end up having that pop back above 3 before Friday ends. In the event that it reverses earlier, you have to see it come back above here. It just has to. So it has to not only make an advancement above 310 or 309 maybe, but then it has to hold. And you can't lose this area. If it makes this advancement early and it jumps above, it has to SOS. It can't be a distribution. And I know that sounds like an obvious thing, but if it's a distribution here, it's not going to stop at 290. Does that make sense? It's very unlikely, I should say, that it stops at 290. It would then come all the way back through and go low. That'd be kind of the end of it. So it needs to be like a consolidation that then breaks out again. And so you'd need to have that consolidation and breakout. And honestly, at this point, I personally would just favor the spring. Like, I know it's annoying for a lot of people because they're like, well, I wanted to go up this week. Why can't we just have a big Thursday, Friday run? Hey, man, it's possible, but it has to make this push and then hold it. And then, yeah, I think you're back into this kind of earlier scenario we had talked about where there's just more of an obvious reaction, right? Breakout, reaction, big volume input. So breakout, then an auto reaction backwards, basically, and then a big volume input. And that's okay, too. That's not as traditionally white coffee, but you could look at that as kind of an inverted head and shoulder here if you wanted to. This is shoulder 1, head, shoulder 2. That'd be one way to look at it. But then I'm looking at these levels as we go up, and actually, you know what I didn't do? I didn't copy this one to the top. Look at where it is, 385. It's perfect. Why not? Why not? Let's hop over to GME and take a look at that. If you put it on that closing value on that big bar, that looks pretty good. The rest of this looks like distribution anyways, and then it drops off of that. It does intersect right here on the 11th at 385. So that to me is a probable pivot point. Yeah. It's curious. That's kind of backwards, isn't it, from what might expect going into this tariff deadline again. But perhaps the reason for that could be that maybe there's a little bit of good news with that, but it ultimately is like not good enough kind of thing. So the market reacts really positively about it at first, but we're really just driving the price up for like a final sell-off on this long-standing uptrend, which SPY's been doing it for a while, right? Maybe that just like that final kind of like last bit push, and then we come back to chill out, you know. That would fall in line with what some of these expectations were on SPY. So then there could be a big push here, but it ultimately doesn't go to new highs and then starts coming back down. I don't know. We'd have to see there's a lot of question marks there because there's a lot that's missing, but we still don't have any of this. So there's that. Like none of this is fully developed yet. I'm going to try to space this out a little bit better. Let me check one more thing, and then we'll look at GME and see if we can get through it with this stream health being as garbage as it is. This is about 52 degrees. 52 degrees. So that's 52.08. 52.08. That's pretty close. Weirdly, though, this kind of makes it look like you wouldn't get here until almost the end of July, like the 25th. It doesn't give you a lot of time going into August to fabricate any kind of sell-off back down to a spring. It would make more sense, I suppose, if this were like the if this overreacted and then came backwards, you know, one way or the other, this way and then reaction down. This would work as a trajectory out. It's just trajectory. It doesn't have to be the trend. It does seem to be following it, though. That's a positive sign. See that? So bulls are trying. Good chance. We were looking for that 10% reaction. Never happened. But there's a good chance that build out has now created a large move, like a slingshot. Yeah, this is interesting. Very classic AMC GME stuff. See how AMC's like going down right back here on Wednesday, end of the day. It starts dropping backwards and GME's breaking out and upwards. It's not going back. Yeah, it's pretty classic micro version of AMC GME behavior. So this wave is actually looking quite right. I'm going to suggest that this is probably as close as I'm going to get to right now. I'm not positive it's going to get there exactly at this time. This would be today and tomorrow, but I think it's possible by Monday. That seems a bit much to me, that it's going to hit today and tomorrow. Again, maybe it's this idea that like we do actually have a Thursday, Friday run. That's possible. But this would be, I think, a little bit off if that's the case. And then if it's an S curve, I guess you could have upside here and finish really anywhere. It could finish at 24 and still come back down before Monday. This would be quite different. So this is like an SOS. Yeah, if it does that. Then Monday is like really bullish and goes up. So this pivot is met, but it's not as high. And I think what I did is I used the 50-50 from the middle here. And this might be more accurate. So there's a second line drawn. I did an S curve to the upside. It's actually more accurately like this. Now here we go again with this YouTube nonsense. Yeah. So that seems possible. And I use the breakout to the breakdown to measure the 50-50. And that actually ends on Thursday, which is today. So that would be my guess in terms of a S-curve finish here. This does indeed pop up. If it goes that high and it goes up to 2477, that's above this top and above this top. So then we just have to come back down and make support. This has already been checked. See that jump right there? It's been checked on GME. So I think that's done. That's definitely been checked. I was like right on the money. So what's left? Let's clean this up a bit. What's left is, I don't know, not much. This seems more likely to me that it hits the 2472. And then Friday, if we have a backup, it probably comes back down to this area right here. It could come pretty low. Right now it's trying to build a support on it. So it's either 24 on the dot or it's like 2361. 2361 to 24. I'll just say 2360 to 24 for a backup. So I'm thinking that this is like not that likely. I don't want to get rid of it yet though, because if it did do that, it would be like more or less like a distributive action. So we got to keep it for now. That's sort of the bearish outlook. Even if we don't think it's likely, probably should keep it. So I think we're going to come back down here, and then Monday you'd have like a breakout potentially. Yeah, that's where we could maybe go back up to this one. This is probably all it's going to do right off the bat Monday. Question marks there then become like, well, if this runs up through the 9th, you know, and goes all the way up to like the Friday the 11th or something, and it goes that far, where is GME at that time? I mean, that's a pretty far run, like a long distance, long time wise. So yeah, it's really far. I don't know. If it makes that bottom and it does hold it, not really seeing a lot of major stopping points. Maybe going into like the next Monday, you could have like a sideways period, and then you'd pretty much be breaking out, going. That would fall in line with the idea that they're going to release information from July 4th, and there's a short week there, I think. Yeah, from onto the 7th. So more than likely, this is where you have, if you had an advancement, this is where you have like a backup period to come back down. So just kind of walking out. It's pretty classic GME though. It likes to back up and check. Does so in a pretty regular fashion. There's not really a lot of evidence when it's doing this kind of walkout that it has to like kind of go nonstop. Most of the time we get these longer winded build outs and then it just explodes. So yeah, I'm thinking then the 7th ends up being like a really explosive time. Going into the 9th. And yeah, then maybe one more push into the 11th. Now, this takes you back up to, it does bring about some other possibilities, because like longer term, that could end up becoming like a larger wedge or something, but not quite there yet. At this point, we do have one more confirmed motion here. That's definitely there. So that's a possibility. But if we end up going into a walkout, then we would be doing like we did here. I wonder. I don't think this is likely what's going to happen. I'm going to get rid of it. I actually think if we do break down, it would probably be up here. Like we would have like a false start and not go up into the 9th. On the 7th. If it were going to break down. So I'm trying to say. I think that's likely where it happens. And then we do break out, it's going to be kind of iterative. It's going to look a lot like this. So you'd have like a move above here, just like this did, and then you'd break out. So instead it would come back up and over and do like a cross up or something. And then move on up. That looks right. So my suggestion, I suppose, would be this is going to be kind of a slower walkout. And all of this assuming that, yeah, it still goes up right here. It doesn't just have some kind of a crap out moment and come back down, which is totally possible. We could see a drop really low. I didn't like that because, again, like it has to make that push up at this point. It would have to drop through here to come back down. And it'd have to come down in that fast. It just doesn't seem likely it would do that rapidly, but I suppose if it did, we would just look at the only other marker we have, which is this guy, and I think that's about as far as I would take it in terms of the TA today. That's a bit of a question mark. This seems pretty likely if we're going to run up into that date. Yeah, and this actually makes a lot of sense because you'd be getting a back up to this level at 28. And that 28 level has been very, very critical, as you can see. This also works as like a second iteration of this motion going up here, going up here. And so you're waiting for that change to happen. And this is exactly where it would need to happen, going into July, late July, August. So it kind of follows through very well. If then the second drop that happens here isn't like this one, it doesn't have some massive plunge, instead it drops and it does form a low, but it does so on a higher basis and it jumps these creeks, and that's that. Now it's going to do the same thing again that it did here and here, but it would do it like again, but going up, you know, potentially all the way back up to 35 before a bigger decision's made. Once again, probably in August or September, which makes sense. So speculative, but it's there. I wonder about this chop specifically. I'm not sure why I think that would be here. Maybe because they did the same thing. We did the same thing that we did last time with this drop and that buyback in. And I want to say that offering was made for like 28 something. So they actually got it above the premium. It was like 28, I don't know, 30 or 28.50. So we come back up here. And breaking out there would make sense if it's going to go back up. This one's like way off to the side. Just curiosity here. I'm going to do something. Mm-hmm. Well, that's interesting. Of course, that's the top. That's a very long-standing trajectory marker. Curious. September, huh? September 24th. Once again, kind of an awkward date. Like not the normal that people often think about, but it's certainly there. This one especially is very interesting to me. I don't think there's an easy explanation for that one. That seems like one of the strongest markers right there. What date is that again? September 24th? Remember where the waves went. October 24th. September 4th. I wonder if I used 2026. I did. I used the February 2026 for that wave. Look at that, man. That's crazy. It's still following that macro wave here. See, it dropped through it, but it's still there. But this is interesting to me, this guy. This is some kind of like a secondary wave motion. It's not the primary wave motion. The primary wave motion is huge. But this one's really interesting because we'd already done this and I'm not fudging anything. I'm not going to change this. This still seems right to me. This is crazy high, but in the end, like the wave is dominant and I use other things to help me to think about how it gets from A to B. But this is still that wave. This is the same wave that we talked about in GME for a while. But there was a secondary one right here. Now I have it going to September 4th, but I wonder, September 3rd, I wonder if this other chart now might shed some light on that. This seems more like the 24th. Could I be off like slightly? Yeah, I guess so. I mean, I just did a kind of an eyeballing of it, but that's the top, and that's weird to me. I mean, what we did is I used I used the cat ear kind of thing, basically, to try to determine. So what I did is I took this bottom, went through this guy right here, and then I took another one here. And that's where it landed, like up here in the corner. So I marked it off. And then I was looking at the big picture, like, well, where is this? Where is that? This one doesn't actually follow. It's like way over. But the wave itself does. The S-curve does. Actually follows it quite neatly, this S-curve right here. So it is indeed a trajectory there, They're all pretty strong. Bull trajectories. Bulls are trying to get back up to all-time highs. And I'm looking at the big picture like, man, it's kind of undeniable that could be a big part of this, because in the beginning, this is established as like one of the main crosses. Like, it's not a huge debate point for me I'm looking back at it. Now this, I don't have it marked as the midline here, but I have it marked anyways because it's there. You can kind of switch these if you want. So you could like take this and make this into the midline and see what happens. And you can see why that's kind of crazy. Like look at that now, all matching up neatly in this wedge format. This especially, the bottom there. So it's curious to me because I wonder if, I don't know. I wonder if there's like I said, you can kind of switch through all of these and just see what their impact would be. And notice like this just kind of shifts over to like a middle here. These all now ride up those guys. It's all pretty solid. So it seems to exist as a potential target. And it's right after GME earnings. So if I'm off by a little bit, it probably wouldn't affect this too much. Like I could be off by like a week or two either way, because this marker wouldn't be significantly different. So right now it's sitting on like the 24th. I think you could probably, argue that, well, you could make it off by like a week or so on either side. It wouldn't like kill it. So right now, that's Wednesday the 24th. We may have to kind of say, well, we can't really be super sure because you're doing this in a weird backwards kind of way. But that seems possible. And what's fascinating is that I went to the other chart because I was like, did I already have that? And I do. I have a September move here because of the local S-curve, but we abandoned that for a second. But it's that simple like equation of 50-50s around markers. So I have at this one a termination point. This is also interesting because the termination point right here is September 24th to come back down to lows. And then specifically the downward cycle actually ends right there early October. So I'm finding that there's actually quite a bit of termination points between mid-September and mid-October. I have November on here, but I think October, November. So anyways, it's that month period this year of, and that's the cat ear. I mean, you can see it visibly, 1, 2, 3, and then the second ear being more flat. This looks really strong. It just has to break out, and that's where we're failing right now because we came back through, and I just think that's a really bad sign usually. It's not typically a good sign. So I'm not going to rebuild the whole chart, but that's kind of the reason why I've been like, 17 back on the table, yay, because it failed to advance right here, and that's really what you wanted to see. However, with this in mind, let me go ahead and make a new S-curve to the 24th around 118, which is the all-time high. Let's just see if this is something maybe bulls have in mind. And then what we'll have to do is make a structure for it. Again, we're estimating that time. It could be a little bit off. So if that's the case, the middle, this would be like a middle. This is 50% right there at 34, so it is a halfway point. It's being used. It's just very weak right now because it's not particularly efficient if it's the case. It doesn't look like it would go that high, which is probably what I did on the other one. Because the other one doesn't actually go up to the all-time high. It only goes up to like 75 because I used a middle that was more in the center of the ears here as opposed to the top. I mean, traditionally, I would use the center. I would not use the top. So what I mean is that like I would be looking for that liquid center, which I think we're at right now, and I'd be suggesting this goes up to like 58 and then maybe at highest like 65, 70, which makes sense. There probably are two, to be honest. Maybe that's all there is to it. it would make sense because if this is ultimately like iterative, wouldn't this have to reach, this little small guy have to reach this top first and then reach this top? So you'd have to have an iteration that gets you to this top. And then so like there would be two S curves. There'd have to be. There'd be one that's like a bigger picture one, and then there'd be one that's a smaller picture one. Because one has to get you here before you can get to the top. So I wonder if that's what's happening. I have it going back up to, yeah, the tip top again. There's got to be two. So the one I drew at first actually looks really convincing, this guy. I don't know if I did it on accident. I just kind of accidentally plopped it there. But the middle of this one is not that high. It is just not. It only goes up maybe to that 75 mark. And then what's the middle? Now, of course, if there's two S curves, it doesn't really matter. But, all right, I'm going to need to flip this upside down. It's not going to make sense to me until I do that. So that's one middle. And then potentially this is the other middle, which follows because the S curve here, use that middle as like an anchor, which is at probably around that 26 level, which makes sense because that's the consolidation point. So that's a liquid center there as well. I think that's probably right. How about this? What if this is really I'm talking about this in very like small terms, with these iterations that are kind of chopping up low, but what if this ends up being like a much bigger motion on this guy? What if it is like a melt up? Because instead of maybe anchoring here, it anchors here. What happens? Let's check it out. I think we already know the answer, but I'm going to check it out anyways. This goes to like 56. By about September 9th, which follows the logic of the chart quite neatly. Because what that would do is it would give you a retest here, but then ultimately doesn't get you to all-time highs, but that's not the point, because you're basically coming into this So how does this then play into it? Why would that matter? Oh, because then if you back up again, oh, that's pretty solid. I feel like I'm right there, but I haven't quite got it yet. I do. I think we're like right on the edge of it. Like right on the edge of the answer. So waves have to kind of click. They have to sort of work together. If they don't work together, they often don't make sense. So they should work together in the end. This does seem about right to me though. This guy. $42. That's actually right on the end of July, which kind of lines up with the previous chart we just made. So you could hit it's like this guy. So this one melted up, has a backup right there. So it comes down and then it backs up. And then does it again. So the middle would have been significantly, actually it's a little different. It's like this. So this like melts up and then has a pretty gnarly like backup. But then it drops down. I'm just going to try it upside down and see what happens when I flip the chart. And then this turns into the cat ear. So this is basically like your S-curve structure right here. So that's how you 50-50 all the way to this point. So it looks like it's not going anywhere. Maybe then it runs up into earnings. This would make sense because it's already going, and then the 7th is when AMC starts taking off to the upside. Sure, that could work. And then you have, so there's extreme volatility here in this build out. And it does work. That works pretty well. Then the problem is you don't get far enough. You don't get down to here. So where did that come from? So bottom to top, this is the 50% mark. These backups then happen on that marker. It kind of changes things. So it's like laying up underneath it here. And there's the upthrust. The second upthrust, which is like this one. 1, 2, 1, 2. I'm trying to go back, can't go back. Just like this, when it fell, it went 1, 2. Then it just kind of melts the other way. So how do you do that on like a macro scale? Yeah, maybe it's already doing it because this is like a cross up and then a drop and then pump. It's like a fake pump right here. It's already part of it. I don't think so. I don't think they're gonna do it again. Yeah, I mean, like I know what you're saying, but that could make it drop back. But I think that it's a tricky question because I guess what I'm saying is I think it's already happened or it's happening like as we speak. Actually, this works really well. See this drop right here and this slide back? I think we're going to do it again. And then this would end up chopping this way until like September. But notice that when this happened, oh, this works really well because when this happened, it did the drop in, but it doesn't come back to all-time highs. So if it does it again, it drops in, it doesn't come back to all-time highs. It doesn't come back to the all-time high here relative to itself, right? To that range. So this actually makes perfect sense. So neither of them direction-wise, it may even be that simple. It may just be like it returns back to that same level. Cool. You like it?
Yeah.
It's cool.
And then this is see this.
No, I don't think so. I don't think it's going to be the same. Or it'd be similar, but it would be like I think bigger. Because when this S curve's down, I don't think it's going to use that anchor anymore. Just like this one, when it came down, it used this as an anchor, the whole picture as an S curve. It's going to do it again. I think it's going to go towards this marker that we're seeing on the chart right now. I mean, it looks like right on the dot around earnings, around $52. And I think that was a good estimation, but it's based on a couple things because you're trying to like turn this guy right here into like a macro S curve. So you have to sort of build out on top of it. So this is just a really, I mean, I did this iteratively. Like I looked at this by looking backwards, but if you look at it, it just looks like an S curve down. And then it's got the cat ear 1, cat ear 2. It's super straightforward. And that's just because it's just an iteration of something that happens all the time. On the bigger picture, this develops itself into this S curve, but it doesn't reach the top. That's important because on the bigger picture, even bigger than that, there's another one that actually hasn't reached the top. And that makes sense because we never came back to the top. So if we didn't come back to the top on the big picture on this pump, why would we do it on this pump if it's like an iteration? So yeah, it could happen, but it's not going to be like all at once like we were thinking, at least at first, which I haven't for a while thought that. But now you need to turn this into the middle because this is the middle of the larger move. So again, going back to this low that we had at 960, when you take that back to 118, this is the middle, right? But it's not acting like a middle right now, is it? No, we're actually beneath it currently. We're sitting underneath it. But this on the micro did happen where we came underneath right here. See that? The middle. So it lends itself curiously to a very similar setup if you look at it, I guess the right way. I don't know. There's not really a good way to put it. Where this guy right here, and I'm going to make it a different color, but see how this like sits underneath. And I know I've got the chart upside down. It's a little confusing. But you see how like that came up and then it dropped underneath the middle. Again, from top to bottom. It goes under the 50%. It's probably near 618 or something. But like, you know, regardless, it comes underneath the middle. This is just a behavior pattern. Like we're trading now beneath the 50% marker. Well, that's true. We did do this probably on the big picture quite a bit. And so when you look at it that way, it's like this already probably happened on the big picture, and I think it did way back. You know, we traded underneath like the 50% clearly on the run up to some degree. Not the original run up, but like this range from top to bottom. Yeah, that's a given though. We never actually came back beneath it. Anyways, things can get kind of messy if you do too much of that. I don't want to do too much of that. I'm just looking forward, not so much backwards. But I'm wondering if that's what's happening here. I'm talking about in terms of an S curve. Like this came back underneath the 50% on that S curve is what I'm trying to say. So this actually did the same thing. It's still sitting underneath the 50% on the S curve. It hasn't broken out yet. So this motion right here of the breakout followed by a backup works really either way. And then you can just kind of make it a line. I mean, you don't even really have to be that complex about it. You could just make it like a straightforward, like top to top line, and you can see why that from an iterative standpoint, hey, it's kind of doing the exact same thing. If this dropped down and it didn't make it to all-time highs, this dropping down may very well very well stop short of that as well, at least initially. Because again, behavior-wise, you're not pushing the limits here, are you? We're just not. Now, we could go a step further and suggest that it's probably, what I've done before is suggest that this is probably like the middle. And it's really just testing the middle cat ear across here. Like if you look at the S-curve going up, or again, or down, I suppose, that's really what's being tested here. It's kind of like a center mark cross, like a wave cross up. And we've gone through this before. I don't want to go through it again and again and again, but it is what it is, right? So this is generating a kind of a wedging action right now that it's observable. It's pretty easy to follow. You can see again, like there's a midline here. It goes way back. And you can flip it upside down or whatever you want to do to help you see it visually, but that's the main track. That's what we're testing. So eventually, you know, it stands to reason, like if you were going to come back up to the top, that's probably where you would do it, or at least to some degree that could be a major pivot point, a really important marker around September, October this year. So it certainly stands to reason, that breakdown, reaction up. And then we're using the same concept in this time period when we're talking about, all right, so this is the wave cross down, right? Where's the wave cross down here? Again, it's not that complex, just really where the cat ears develop right in the middle. So it's somewhere in here. So in light of that, I think it's fairly straightforward. If you have like the end in mind, if you begin with the end in mind here and you think that is probably pretty close to accurate, it may get a little bit lost in the weeds, but then you should have a middle. And we do. And it's the correct middle, I think. It's right here. We've kind of known about that, though. We talked about the it's really where that cross down happened on the wave up. And we sort of mentioned that when we were doing the I don't know if you guys remember this, but we did the S curve to the upside. And we talked about this guy and how that was the wave pattern, and it should come back up towards 32 to 35 if it finishes, and it did. It took a weird way to get there, but it got there, and that was the center mark. On the big picture that's now presenting itself also similarly, this whole area right here as like a center mark. So it stands to follow that reasonably, I think you could argue that there's a center mark here between these two ears, and that is where we're going to go if we come back up. I have difficulty from that point forward because that would be, it's kind of a tricky one because there's, right now it looks like it's right on the middle. Like it looks like it's right there, not actually over here as a center mark. But then also what's tricky is that if you look between the ears here, this is what I normally would do is do a, here's the support, here's the resistance kind of thing. And right now it's pretty low. That's where it is. So it is indeed coming across this middle. It's there. But right now it's kind of low. Like maybe we could ignore this point just because there's two stronger hits there and almost a third. But any way you slice it, it sort of stops at 42. Let me try one more thing real quick. Let me just see what that retracement was. Let me see if they're going to use a similar one. So it was near a 618 retracement, it went as high as probably the 7.5. So let's use a similar retracement here. So is it the same? Yes. All right. Well, there you go. So measure-wise, it's measuring out to also be a 6.18 and then possibly a 7.5. The 7.5 is 50, which again really makes a lot of sense if you look again at the big picture. I'm not getting it like perfect, but you get the idea. So this is like a 6.5 or a 6.1 retracement to 40 and then a 7.5 to 51. So yeah, reasonably speaking, I do think this could happen nearly all at once, probably going into earnings or right before it. So estimated earnings dates on the September 2nd area. So at the moment, it's looking like $50 by September. And that does work. It's not exactly in the middle. So maybe it goes a little beyond it. But it's really close. The difference is fairly negligible. It's like 34.20 to 33.40. It's less than $1. And that could just be me making like a sort of estimation errors. It's possible. So I'm not really measuring everything like exactly perfectly. I'm just trying to get a picture here based on this trajectory. So yeah, so this seems like a really strong marker, but then I guess the concern would be like, would you then go into the same thing again if it doesn't advance here? And I have to say, I think the answer is yeah, because I don't know, and this is really slow, but I don't know how else to I think it's going to be going up around July. Yeah, even if it dropped again, I think you're still going to see it go up. We're not saying it necessarily does. We're thinking it could break out before then. But I think even if it dropped again, you'd still go up. How long was this run up? Yeesh, that was a huge lag. All right, so this is semi-consistent. Probably hit a big lag spike just now. This is semi-consistent. It's not perfect. So this is a bit confusing because it looks like two different scenarios, and I guess it is, but honestly, it kind of makes more sense if you look at the earnings where it is, that this might actually peak in August, I wonder, and then have like a pullback. I bet it's like a final pullback when AMC is doing its thing. And then instead of going up all the way, it doesn't go up all the way here. It just goes up like partially. So you get kind of a second motion. That wouldn't surprise me too much. So this hits like $60 or something in extended hours and it opens really high. Yeah. So it's kind of the same thing but flipped. But the reason that makes some sense to me is because the way it happened last time, the earnings was actually the weaker push. Like it had already been baked in. And then August through, I guess the rest of this would have to be the September 24th. Yeah, but the thing is like this has already changed character. So like at this point, it's the same breakout here, same breakout with cat ears, same breakout with cat ears that we had here on the big picture and on a smaller picture. But if it can hold this ledge just like it did here, then it could do it again in a squeezing motion, and that's where you could see the change finally to the upside. The truth is that eventually this has to then make a different action. It can't keep doing the same thing forever. Otherwise, it would just keep going sideways forever. So if we use... This thing keeps getting off for some reason. If we use the information that we have already, like we already know there's a possibility of a push up here. This is already a little different than we saw in the macro. It's more upright, not down as much. But what this does is it basically like presents you with like an iterative motion upward and outward potentially. So this could be a change here. We'd have to wait, and I don't know. It's a CHOCH, change of character. Potentially, but we don't know. And that really would depend on how high it goes. So in theory, we've got this all pretty darn simplified. I mean, it's actually very simple because this is pushing up back towards the middle arc. Both are doing the same thing. They're reaching up to hit the same marker. It's an acceleration. When it comes back, it sandwiches underneath the sort of that ledge and then builds out again. And it comes back to where that 50% marker is. So if we did it here, it'd be very, very low. But I don't think it would do that. I mean, it could. I suppose if it did, it'd be bad. You could end up in a really, really, really bad situation where, and I just don't know how that happens, but basically we come all the way back down to, I guess I'd have to come back to here. This is really far. But it just almost makes no sense to do that. So I'm not sure. So I don't know if there's going to be a change of character yet, but it had to be here. You'd have to have some kind of an advancement. It says, yeah, we're not going to stay underneath that creek forever. Otherwise, if it stops short, nothing really changes. And so, you can keep going with this in just generalized terms and say, well, this makes a 618 retracement here on the other way. So if this broke out and went back to near the top, yeah, it works. I mean, then the 618 retracement leads you back down to the creek. It's very evenly placed. Yeah, there's the 0.5, and then this is the 618 here. And then again, that's near the 50% marker. It's right underneath the 50%, just like this one was. So it kind of starts all over again, right? And then you go into like the same motions. So, I mean, it wouldn't be that slow, probably a lot faster, honestly, but it's hard to say. But yeah, this goes back See how that works like exactly the same? It's weird how perfect it is. So it takes you back up. I think this is pretty likely going to go all the way up there on the first go, not the second. The second go would be a change. But then that 618 retracement, if it reaches back up to that mark again at 51, the 618 brings you right back. I mean, look at that build out right here. Goodness gracious. Sometimes I wonder, it's like, look at where that build out is. It's right on that golden pocket. It could not be more perfect. When you space it from the distance on this bottom to the potential to hit that trend up top, it's like right there. It's crazy. It's crazy tight. So if you don't like all the extra nonsense, I mean, that again, we're building that out from an iterative standpoint. I really just started with waves and like trajectories up, and we went from there. But I think that this is probably right. Like, this is like going to likely be like a stopping point. So the first S curve is basically a marker. It's like this one. So basically it's a marker for the next one. It's not actually done. Just like this S curve right here is a marker for this one, so on and so forth. Yeah, so these represent, I see. These spikes then represent retest on that marker, and then this would be like kind of the big burn down if it goes down again, the final sell down. And it is a change because now it's backed up to this creek. It's beneath like it was over here. It's done the 618, right? So it's backed up. It did the 618 retracement just like it did before. And then I guess it goes into cat ears. This is where things get dicey. They like kind of run out of time. There's no time between this termination point and that. So maybe that change of character happens pretty rapidly. And then the next cat ear, which is this guy, is that acceleration. That wouldn't surprise me very much either, because when GME gets going, it's really hard to tell that this is like an M cross, right? It gets really compressed to a place where it's like, I don't really know is that really a cat here, but I think it is. It's just the way in which it's built out. So this would be a good place to kind of have a hard drop, very quick consolidation. Go get scissors or something. Use a tool if you need a tool. So my guess is if it's going to go, this is where the kind of the rubber meets the road, I guess. Because at some point it's got to come back up, follow that main trend back up to the top. We may be off by a little bit, but this would have to be where this cat ear breakout, instead of doing this kind of nonsense and building out really big, really just kind of goes. So you'd have to see that from a different lens as just like a sort of a straightforward, like it's going kind of motion. Like 1, 2, and then it's just a squeeze. That's kind of the end of that. And then if it didn't do that, if it takes kind of a longer winded approach, then this becomes like a weird middle point on a very, very, very big wave, unfortunately. And that's where you get to like that 2027, 2028 stuff, because at that point, this now is like a massive pivot, and I think it changes a lot about what happens later. And some might say, well, why can't that just be a January run? Maybe this is wrong. It's going to go into January. It's not going to go into randomly into October. And so you're getting this August run, but you got the second part wrong. It's supposed to be a January run. Again, we'll have to wait because I don't have the information right now to see it. Like, I just don't have it, but it's possible, I guess. It didn't turn into like a massive pivot. When we did this before and we found this kind of stuff, it was a little bit troublesome because, if you have this cross up here, it works. But by coming down repeatedly, you're kind of generating a behavior pattern that's kind of awkward. It almost doesn't make sense. So by repeatedly like bringing it back down, instead of just crossing up and over, you're saying that like we're going to keep bringing it back down. It hasn't changed character yet. So like there's a problem there. Like it keeps coming down, down. Yeah, it's more accelerated. So maybe that's a good sign. That's what I'm saying. That's why this might look really different, because this could start building out into like a huge breakout mode. If this is indicative of a change, it's making higher lows instead of lower lows, whereas this guy was pointing downward, right? This one's pointing upward. Then the next one may also be a change that points even more upward, right? And it starts developing into a much stronger case that this is indeed going to like break out and just start going. So that's an acceleration of sorts. But we're not quite there yet, so I guess if that were to happen, you'd have some kind of another one, and this one, instead of going lower, it would probably go higher. Like, so instead of making another low here, this one already advanced. This actually advances the creek. So this would push the advancement. That's why I was saying I don't know yet, because you have to see the change of character here. If this advanced the creek, then the next one has a good chance of breaking it. And that is where you see, this acceleration happens, and then you get this like push out. Now it's in a completely different model of like advancement. So the walk up here is more like bullish, so on and so forth. Final S curve, whatever you want it to look like, I guess. Doesn't really matter at that point. It's going up, right? But this is where that change has to then take place, so that the next time it's basically just like, it's going up, right? Like straight up. So it's possible. I don't know what that makes of this, I think it's a strange one then, but maybe again it represents something that I'm not really sure about just yet. Or it's like AMC. The AMC GME thing, where maybe there is another move here that's in February, but it's not for GME, like maybe GameStop's already up here, and that's what I'm saying, like that could be possible too. And this happened on GME the first time, right? Where it has a second big move, but it's a big move, but it's like, yeah, it happened, but it wasn't. Timing wise, it wasn't quite the same. So, I mean, there's just all kinds of like, I don't know, moments here. Anyways, point being is like, there seems to be a pretty strong S curve up towards 120. None of that says it's going to break all time highs necessarily, but it's there. And who knows if it goes that high if it goes that high or pushes above the top here, maybe the second move does go way up. And we had looked at that. Back in the other model, because the wave up doesn't finish till March, and it goes all the way up to 332. That's super high. It's way up here. Again, that might seem a little bit wonky, but if you think about this as like a 50-50 up over the top, maybe it makes sense. This could end up being like the final bottom that we just hit. And you look at where that goes, it certainly could be up there quite a way. Maybe not 300 something, but even if you 50% off the recent top, that's like 216. So it doesn't seem unreasonable to me. Anyways, I kind of like this way of looking at it. This is a little different than some others. The biggest concern being that if you have a rising iteration and it's kind of shrinking up into a corner, that's typically not a good sign. Especially when it comes to stuff like this, it really depends on your perspective, I suppose. There's a couple ways it could go, but usually that's not the best of the signs, right? So if we saw this and we saw it drop down and then it pushes back up, well, naturally, if this is a cat ear, there is an expectation that potentially you could get a 1, 2, 3, 4, right? And it could go a number of different ways from that point forward. Usually, this iteration from here in ends up being kind of a copy of everything that came before, which is what I'm saying. And I think it is. I think that's where we are right now in the situation we're in. But, you know, that being said, what happens here is not predetermined necessarily. And so, yeah, if you get to this place where you get this breakout moment, then yeah, absolutely. You know, that's exactly what we're showing right here. That's how it worked out. Because these iterations are shrinking up into a corner, but then in the end, it's going up because it's moving and making those appropriate jumps. So this ends up being like a 1, 2, and then you basically have a small 3, 4, and there's a bigger 3, 4 in the midst of that. So it's a bit of a bizarre maybe way to look at things, I guess, in the grand scheme of things. And it doesn't really give you necessarily the answer for where it goes unless we look at the wave cross. And I don't really have a better one than what we already saw today. So we were looking at this already. This is a pretty decent one right here. This one's pretty good. This one's pretty good. Both of those would suggest that you're probably not going to go significantly higher than like 200 if you do get to 200. Right? 1, 2, and then 3, 4. Where this is some kind of weird micro middle. It's compression, which we did measure before, and there did seem to be a lot of compression into August. It'd have to be like the middle, is what I'm trying to say. So, yeah, that actually works pretty well going out into February 2026. This guy has a middle. Just don't know where the target is, though, like how high it goes. This does happen a lot, by the way. The middle is marked by some weird volume spike. It happens all the time in the middle of the cat ears. There's like a bizarre volume spike somewhere. It marks the center point. I'm just concerned that this is distribution. It's going to come way back down. But for now, I'd still say the middle is there, that volume spike, and then February is indeed that equal distance. So, something to think about. I wonder if it's as simple as, like, again, what we were talking about, like that's the middle right there. That would stink, though. This would never come back above all-time highs. It's not possible, Booksy. GME must come back above all-time highs. It will. It must. I don't know. I don't know. Well, the thing is like, this doesn't really say you couldn't go to all-time highs. All this is saying is this is like the center mark on that wave. So, in theory, maybe you do get there and you get to all-time highs and you get there, early, like we were saying. It kind of looks like it hits like $80 and that's it. But if we're just being like really conservative. But I mean, like, that's what I'm saying. Like, this could go up above and then track back through the middle again, just like it did here, and then fail to advance the second time. So we're saying, like, well, it does advance. Well, what if it doesn't, This could be where it fails. So it does hit all-time highs, and then it comes back and it fails, in February. Wouldn't be wrong. That's very similar to what we were talking about before, where this pivot point could be the February point, of interest. You've already made the move and you're kind of chopping up into the corner by the time you get to February. That's what I was saying on AMC too. They may have made the bulk of its move, but well before then. And this is really not going to be a last minute thing. This is more like this is the end. We're seeing a lot of similarities across the market with a lot of stocks. A lot of tickers seem to suggest February. So it wouldn't surprise me if AMC and GME front run again after being slowed down. They kind of look like they're behind, right? Then they front run. They kind of whip around. And then February ends up being pretty good for the market, but everybody reaches the high there and then we take the other way, start back down again. And long term, who knows what that means, but for the short term, I think you could make that argument that it kind of makes sense. So it's not saying you couldn't get there, but maybe it's just saying that, like, kind of like in this area, when it hit, it peaks at all-time highs way here, way early. And then when it drops, by the time the market reaches all-time highs and drops way over here, it's not at the peak anymore. It's down, and that could be the very wave that we're kind of tracking. So it's totally possible. So that $80 or whatever, that seems to be like the actual halfway point. It may make sense to be the actual halfway point. I don't know. It's interesting to think about anyways. This is like super low. So it's like halfway is right there, right here. It's like $100 or something instead of. Yeah, that makes sense. I wouldn't put it past the market to do that. And then you'd have a really long. I mean, to me, that would look like a distribution. But I'd also look at it as now we've got a new wave here. Probably from the top even down through this area. Wherever this finds a support on that final push. And that's where you're going to like walk back there. Slow like kind of like it did here, but maybe a little bit faster. I don't know. That'd be a weird setup, but this looks right to me. The only other alternative is it doesn't cross up. I mean, and if that happens, this is very bad. You know what I mean? Like, if this shrinks and then doesn't cross up, you might get an up thrust here, but you may even get like what looks like two, but then you're going to end up coming back down. And almost always this ends in like a drop back towards that creek. It just doesn't, there's no alternative, so it would be extremely bad, I would say, if it fails. Yeah, this is what it looks like, because this is an up thrust here, and then it does one more here on the micro. So, I mean, the alternative is not exactly great, you know. You're talking about failing right here and then heading back down. And as previously discussed, that's like going low into probably around November or something. It's quite the opposite. It literally looks like the opposite. But that's the reason why the cat ears are so important. It's distinctly different. So, and I don't care what anybody says about whether they think this is possible or not, or they think it's fundamentally sound or not. I don't care, because at the end of the day, if you can make the measurement and it's there, and there currently is bear trajectory there, then, and the big picture macro has that wave. If this is distribution, that means they're loading up the other way. You know, why would they be doing that if this? I don't know. I'm just saying, like, you can make the case. So I don't find it to be disingenuous to suggest that it's possible. I think if you try to break it, then that's one thing. But if it's just there, then it's just there. You know. So I think it's just there right now. But I also, in reading the chart, I'd say it's a mixed bag, because this could be very much a distribution with that one weakness here, although it has built out wider. Now I'm waiting to see if it makes this jump. If it makes this jump, I'm not going to be bearish about it. I think it's pretty straightforward, going to just kind of iterate into a pump. But the downward wave is there, so for good reason, perhaps. And maybe that's what this contention is all about. You know, in the end, why do we see what we see visually? Because there's a contest of sorts. Sure. All right. Yeah, I think we've pretty extensively covered the two, and it looks like SPY is at 611. So it made it to that target that we had. Pushing up near all-time highs. Pretty neat. Oh, zooming in. Should be zooming in, not out. That's good. Some stragglers here and there, but this matters to me. I think it matters. If it goes into an SOS during this period and chops, I actually think that's probably a good sign for AMC to some degree. But I would like to see it make that last pump, and then it could go into its spring while the rest of the market is like chopping and getting ready to leave. That makes perfect sense. So let's do it. Let's get it over with, right? Rip the Band-Aid off. Yeah, so I think this is pretty reasonable. You know, there's again, there's some things that we'd have to kind of address for downside here if it happens, but I'm not going to go into the bear side right this second. This looks like it's holding up pretty well. This is the other one, not the weak one. This is a lower one. Actually looks pretty good. We just need to see it advance again. So, yeah, I think $50 in August seems pretty safe. Farther out in September probably seem pretty safe. September's probably a lot safer than August. Just to have it. And then same with AMC. September be safer. Mid to late September. Because I think August is going to be a mixed bag for the two, and there's a lot of question marks there for me. But I think that by September, you'd still have upside, even if it's kind of bearish, which I don't think it will be, but if it is bearish, even still, it would have been up here by then. So, all right, guys. I hope you have a good one. Do I think we reach 12 by August? Real quick. Well, I did an analysis on AMC, and I've been doing it ongoing and been kind of changing targets here and there. I don't think we hit 12, but I'm also of the opinion that I don't know for sure. So this is not 100% or even like a 90% kind of thing. The problem is that AMC has very, very clear and distinct paths ahead of it. To me, they're very clear at this point. Like we've had a lot of time to build out a bottom. There's lines that are there now that are just there. You can pick and choose which ones you want to use, but they're there. Like we're not guessing anymore. And when I did the lines that we have, there's very strong evidence that this may not go above 20 into February. And I don't like it. I still think there's evidence that it goes up to 50 to 60 even. Like this guy, right? Very similar. Like almost a copy paste of what happened the first time, but from a different point of view. And then obviously kind of returning back to the same all-time high on GME might look really different on AMC, which wouldn't have numerically the same value anymore. I've found that there's evidence of that still. We did a chart the other day for it. I've done multiple charts, and I think that there's enough evidence here that suggests, yeah, it's very possible that this returns back to at least the 50 to 60 to 70 mark based on certain wave schematics, certain timings, things like that. I didn't go into this today because I didn't really want to deal with the macro. But you know, it's still there. Like there's a huge macro wave right here. This is the big picture, and this is 2020 on the left. This would be where it would go. And if even with the shift involved, it goes back to this region right here, which is interesting, very interesting to me because it's essentially the entire time that ape existed, but it's been shifted. It used to be higher. It used to be up here like 180s. Now it's lower. And this is based on the shift values and then potentially going up into 2026, you know, and then beyond that, who knows? But the problems that we run into with this model are numerous. Like it's supported on a small scale, or excuse me, it's supported on a large scale. It's not supported on a small scale. There's a lot of debate that I've had, and on the bottom itself, it's really very strong. There's a very strong level of support that suggests that you don't even get above 20 till like 2027 or something ridiculous. So, you know, when I look at AMC, I'm like, the issues there are kind of numerous with the short term. A lot of these trajectories are extremely weak, way weaker than I would expect them to be. The differences here are not to be ignored, you know. Do I think it could have a melt up that goes up to 10, you know, $8 to $10, or maybe, you know, again, maybe push to that 12? I think it's a possibility, but the more that we've kind of looked through this, we found that there's actually quite a bit of evidence that this, even if this did go up to like 11, that it really bakes and rebuilds around that middle at 6. That $6 area up to about $6 to $7, that really is where they would want to reaccumulate. Well, it puts it in a bad light going forward. If you have that kind of a pump here, great. Short term, people will be excited that it pushed. But then if it consolidates and rebuilds around the 6 to 7 area, a breakout would be closer to like $8 or something. And a 50-50 doesn't take you past that gap fill area around 20. So, well, while there is certainly a possibility, while the macro still has this clear evidence of a possibility, there's still a lot of question marks there, you know. I think when you look at things in their original context, the idea of this pumping up and doing kind of a copy paste still makes a lot of sense. Just again, from a wave perspective, that by about February, this thing could be up in the 50 to 70 range is very possible. But when you start looking again at the structure as it's built out, I think it's questionable. I think it's very questionable. And I can see a route that has also been used by AMC in the past that's not particularly, I would say, short or long term, is not particularly bullish. It's kind of a middle ground path, which takes a lot longer to build out. And that path we've talked about, I think, recently, so I'm going to pull it up. And that's here. And so there's strong enough evidence to suggest that if you wanted to kind of stop short of making that fuller move, really what this represents is still a huge move, but this move up to like $20 happens by February, right? And then by February you're breaking down. This move looks really weak to our naked eye, but the fact is that this is more locally how it's been built. And I don't like to trade the chart based only on what I want to have happen. I need to have as unbiased as I can possibly get. So, of course, I want it to do the bigger move. That's a given. But there's very strong evidence that if this is the spring and it moves up here, that the 1-2 only gets you back to there. And remember that with the chart shift, that would take you back to this 45 ledge. And that's what kind of strikes me as makes this feel very possible to me. Because a lot of times the first move after that drop ledge reaction is that you'll have a move that comes back up, but you don't necessarily break out, you know? So, like a lot of times, again, I know I've done this diagram a lot, but it's important to understand why I think this is reasonable. Because a lot of times that first big reaction, you know, if you're coming off of this kind of a bottom, it doesn't actually go beyond here on the first go. It fills the gap, and then it finishes with a creek retest. So it's one of those things where I'm like, technically, like, yes, the wave could be going all the way up, and it probably will at some point. But from a helicopter perspective, and just looking at it from, hey, here's what normally happens here. Like, this is really common to have that reaction happen and then honestly have like a longer backup here is totally reasonable. And we've seen it a number of times, you know, and it looks a little different every time, but like that's totally normal. And then you come up later and have like a little more of a cup and handle. So what I'm looking at is like, if that were to occur, you'd have a longer backup period. You basically just iterate the same thing again. That's very similar to what we're talking about here on GME, if you think about it. Yeah, GME looks like it's going way farther, but if this were to happen, it hits all-time highs, so on and so forth, it comes back down. Oh, that's not far enough. You know, AMC needs to go all the way up to 70s or whatever. That's still a big move. It's 460%. You know, I'm not going to measure it every single time, but this is a huge move still. This is like 700%. So if I saw this happen and it pumped and it went to, let's say it goes to like $8 and then it pulls back, I actually think that's fine. Again, the way this is built out, it's not building out as well as it did in 2020. This is not nearly as steep. I mentioned it's kind of shallow. It doesn't seem to point to the 50-something top. So the macro wave setup does, but this doesn't. So then what is this? Like I said, on GME, sometimes these push-ups, right, they represent like center marks on like much wider picture, bigger picture moves. This S curve does go up, right? And it does go up to 35. It didn't get to that 40 some odd thing. It goes back down first to check like really low for liquidity, yada, yada, yada. Same thing could happen on a bigger picture here. It could be that there was an acceleration that was designed to kind of get there at a particular time. They changed their mind about going there based on liquidity or something. I don't know. Or that they were able to trade a lot. No idea. They think they're going to have a lot of trading that happen in this range. This is exactly where I would distribute it, right off the bottom. It's perfect, you know. And then the way the creeks are set up here, it's designing itself out downwardly this direction. Like we're going to come back and spend more time here in the future, right there. So I'm like, you know, it bothered me in the beginning. It's been bothering me all along. I've been very vocal about it. The fact that this is at this weird kind of an angle just really bugs me. Like it's been bugging me ever since it started. And the fact that we've distributed along it really makes me worry that, yeah, we'll break out right there and it'll be like $6, you know, in January or something. And then it'll pump to like 20, but that's going to be like a comparable gap fill. And then we'll just back up and do a giant cup and handle, you know. And I said there's a lot of potential from there for other things to happen. Again, another backup. I don't think that's as likely. But this brings you out into like 2029, which is when those the debt would be due for the restructure again. Kicking the can. And I don't remember exactly what this wave looked like, but a long time ago, I looked at a wave. It was like January last year or something like that. So it was like 18 months ago now. I looked at a wave structure here on this as it pertained to like Fibonacci extensions and stuff. And this wave was pretty darn wide. I mean, it's what really got me down the path of thinking about this could only go up so far in February, right? We may have this issue of, hey, this isn't really going to do the same thing, but the wave itself might be the same length. And I think that when I looked at it, it doesn't really compare to this one. This one looks like it should be going up higher, but it was from, I mean, kind of without doing it super strong. It was basically like here down. It started back here, but it'd be hard for me to find it at this point. But I guess I could do it like really quick. It was basically like this. And then this wave would go up into like a massive double top motion. That's not what that looks like. I know because it got shifted down. We mentioned that before. But imagine if this were like a double top right here and it hadn't had this kind of gnarly slide. It would just be like basically it's like double top, double bottom, double top, double bottom, double top, double bottom, double top, right? But then each one is taking longer and longer and longer to build out. So it slows down. And this is a very bearish outlook because this is the one that led to like $1 or something like that. But yeah, this actually made sense to me then, and it still makes sense to me now. It's not what I want, but it's there. You know, this is accumulation distribution. You know, accumulation distribution. And then it would have to have a change at some point or else it would drop here. But that's the same idea conceptually. And on the big picture, do I like it? No, but it does work. There's an alternative wave here that's very low. We talked about this maybe a few weeks ago or a few days ago even. I can't remember. It wasn't that far ago. So as opposed to an upward trajectory, it's a downward wave trajectory that just fails to advance back above this level. And it would have to make a decision later if it's going to do it. Normally, this kind of stuff right here would be right up underneath this 45.50 ledge. But because of that shift, I speculate that it's here instead.
And let's be honest, should AMC be trading as a stock between $5 and $20? I think most people would agree that that seems pretty reasonable. And honestly, I think bears would say that that's unreasonable, that it's worth way less than that because it's essentially still massively in debt and can't afford to pay its bills and burning through cash like crazy. Bulls would say, well, that's what Cinemark trades at or whatever, you know? And then hyper bulls would be like, no, man, it's going to the moon. Shorts haven't covered, right? Whatever. The point being that, like, this to me is a very sensible range. I think you probably find a lot of buyers and sellers in here. So long term, does it make sense? Probably. I mean, and that's really where we were predominantly trading before. If you look at the range from like 35 down to 2 and you just divide it in half, that's like 17 or wherever. So that makes sense that this would be like a desirable center point for the original trading values. It's as if you're consolidating around middle values again. So I'm trying to say. Granted, valuations changed a bit. So my point being that I'm very much of the opinion that, you know, either of these is entirely a possibility. Like, I don't think it's impossible. Because I've seen it both ways, and I think that you have to kind of just take into consideration that, yeah, there's only so much you can know, and if the information is there, then you shouldn't ignore it. And I think the information's there. So this to me looks like a very possible, you know, build out. And that was roughly how the timing worked. I know I just said I didn't really do this very well because I didn't include the rest of this other stuff, but that was roughly how it worked when I first did it. So yeah, and who's to say this ever goes past here, you know? Like, if I were looking at this, I would be very happy if it went past $12 again, you know, just realistically. Weirdly, to me, it's like this could get up to this $20 and still be within this channel. If they got up here by 2026, let's say it hits, I don't know, if it hit in October, it does the same thing or something, and then breaks down into February. Like, why would we look at that and say that that's not possible? I mean, you got to look at it and say it's possible. So that's my opinion. So this bodes very well short term, perhaps. And, you know, I know this doesn't look exactly like what I just drew a minute ago, but we probably could make it look like that. I actually might go too high. It pushes over the top a little bit. It's a little late. This is a similar concept, though. That's just the first move, Booksy. That's what I'm trying to say. I don't know. I think you have really good evidence that it just doesn't go. And then there's pretty decent evidence that it could go. And then most people are going to look at that and say, that's just the first move, man. It's just the first move. And then it's going to go all the way up to like 80 or 70 again. All I can say is that right now, it's not built that way. It doesn't seem to be built that way to me. I think both are possible, but I'm most concerned about the $20 mark being kind of a stopping point for now. And to me, like, this seems extremely reasonable. I mean, just look at it with that wave involved. Doesn't it? It just looks like exactly like what you would expect to have happen on this kind of garbage. And the way this is setting up, it's really hard for me to be like, nah, it's not going to happen. I don't know. Hang on, let me put this one back on. That's right in the middle, guys. Right where it should be, you know? This is kind of interesting because if it happened that fast and it doesn't chop here for a while, it'd be kind of interesting to see what happens there. Hey, what do you know? It's the same. Just a new low at 240. So if you take that measurement from top to bottom here on that drop, and you just go to 240, which is just the current low. I mean, you could go down to 239, I guess, or just slightly below it. To say, oh, it hits 238. The top here is 1883. I mean, it's not. I just don't find it to be that controversial, I guess. This idea that like it could just stop. So here's what I'm suggesting. If it goes up and it breaks to, and it stops at like 750 or 8, and we start seeing like major consolidation after first week of September or something like that, whenever that first pop happens, I would be very cautious and suggest that it probably doesn't go way up. Probably only goes up to like that gap fill area. And I know that it may seem a little odd to draw these comparisons like I do, but they're just there. You know, that's where the gap is. It's like right there. So the triangulations here are typically pretty spot on. It just looks like something AMC would do. And then just take like a really long hiatus to do the same garbage it's always done. Anyways, you get the idea. I wish it weren't the case because as much as this looks correct, obviously, you know, the other alternative path is still like, it's still there. And I don't think it's wrong. I just think that it's possible things have changed. You know, this was there before. So it is a halfway point here. So, I mean, there's still a chance that that happens and runs up again. I'm just cautious about it. I think you got to be really careful. It's a difficult one because it's going to look right to most people, especially after this thing pushes up. And there's going to be a lot of questions about, well, if that's happened here, couldn't it happen right here? And I know. But I think that's the clincher, right? Is like, we don't know. Like, we won't know. No one's going to give us the answer necessarily. So this looks very optimistic to me. I'm still of the opinion that it could even be like slower than this too. Like you could have a push to like 10 and then really sit down here and do the same kind of reaccumulation there. So I think both are probable. So for me, I'm not going to trade very much. If I were to trade long term, it'd have to be out past March calls for like 20. And then everything else, I think shorter term would be 7 to 8, maybe $10 calls for October. That's about as far as I go. And shares, of course. I have a lot of shares, but yep. All right, guys, I'm done. I will be on tomorrow. Hopefully the internet works for us. I know it's kind of a weird day, but we'll see what happens. Maybe there'll be some good news by tomorrow. There's some interesting things happening on the small scale that we talked about first thing. We'll always keep coming back to this if we need to. But for now, hope you guys have a great day, and we will talk to you later.